All right, so I take this opportunity, welcome everybody back to the message. We're going to jump in and we're going to check out the passive portfolio that's comprised of the Vanguard's specialty ETFs. I roll these updates out to you guys to update you on the progress, see how we're doing. We're up in every single one of these positions. Passive investing is the slow and steady way to achieve wealth and to build wealth for yourself. So you want to stick around for this, guys, as we jump in and we cover the holdings and the dollar amounts that we're working with here. All right, for you guys that enjoy the independent investor channel content, this is an awesome opportunity to jump into a real account. We can monitor the holdings within this. Just to premise, this is a very, very simple way of investing in the 11 sectors of the S&P 500. For you guys that are fairly new to investing, a sector in the most specific terms are just your areas of the market that cover specific industries like technology, industrials, healthcare, materials, energy, utilities, and the like. So I invest in all 11 of them, and there's a reason why I do this. It's very, very difficult to try to pick the right sector at any given time. If you try to do that, you're going to have a sector that you don't own outperform, and the sector that you chose is going to underperform. So it just comes back to my whole, while you're trying to outthink the market, it'll zig when you're trying to zag. And this is a cool opportunity through M1 Finance to buy these sector specialty ETFs. And this is kind of a hybrid way of investing. I have yet to see anybody else attempt this style of investing. But I think coupled with the opportunity with M1 Finance to control your actual target and allocation to each of these sectors, it really does add a very interesting dynamic to a portfolio, and it adds the opportunity for some broad diversification and the ability for the investor to go in and kind of throttle their portfolio or adjust it to their liking. So pretty important to understand there. And I think it gives a little bit more freedom and flexibility than just buying the one S&P 500 Vanguard ETF, which is VOO. This allows a little more strategic adjustment in the portfolio and gives just a little bit more freedom to the investor to own the broader market, introduce some small cap exposure, because each of these sector specialty ETFs do, in fact, dig a little bit deeper and give a little bit more broad exposure within technology, discretionary, and the like. So just an interesting way. And you say, well, Ryan, does it work? And I would say, well, we're just at about $9,411 of contributed capital here, okay? And we're up over $2,500. So I think when a lot of people start investing, I think perhaps they don't know where to put their goal. In other words, they ask what is possible in investing. This just gives you a very, very simple example of what is possible. Now, I've had this account here for going on, 16 months or so, about a year and a half, just a little over. And I think anybody would take that type of rate of return here. We're looking at on an average of over 10% here in the portfolio. So nothing to complain about, especially when you're looking at checking a lot of boxes. Diversification, absolutely, 100%. Are we making a dividend to boot in this portfolio? Yes, we are. I'm about to be paid the December dividends here in this portfolio, and it's awesome because all 11 pay at the same time. So it's like winning the lottery. But you can see here 162.85 of dividend payouts and 23.74 market gains. Market's been conducive to these type of gains in the short term. I don't really put a whole lot of stock in short term, but it's fun to come on and show what the power of stock market investing is to the positive for anybody that's interested in sitting back and looking at what a real portfolio is. and also exploring what a platform like M1 Finance can offer to a new investor or a seasoned investor alike. Here, the value over time has been interesting, some fairly anemic growth here. This is where the portfolio was started, and I went from March to November just with a very, very small funding schedule, and so it just kind of slowly crept up. And this probably was indicative of a small fund up here, probably 500 to 1,000. I'd have to go back in history and take a look-see on when that was. And then we were trudging along into 2020. And then this little blip right here, it looks little on the chart, but it was actually the pandemic lows here for March 23rd. Is where that low was, and this is indicative of my buy point. And I don't mean to toot my own horn, but that was a pretty good attempt here. If I went back, I believe this buy came within a couple days of this pandemic low. And so M1 Finance, my strategic out on this account is always being able to fund it up at any given time. So if I see that conditions in the market are conducive to buying, then that's exactly what I'll do, and that's what these fund ups are indicative of. And then we continue on with our dollar cost average, and then right here, this little blip right here is another fund up. Okay, so that just kind of shows that you can either set this up on a dollar cost average schedule and take a few $100s out a month. I don't. I have this set to about $25 every 2 weeks, I believe. But I also keep an eye on it. And when I want to take a fund up, then that's what I do. And I absolutely reserve the right to do that. And I do share that with you guys because it adds a layer of strategy that I'm not afraid to deploy it at a moment's notice but to buy when I think that the market is conducive. And then here we are at the time of filming the video. So we'll cruise down here and just take a look-see at the performance. We're batting 1,000 here. All of the holdings are up, and they're up quite nicely. They really are. A couple of these have crept over the $1,000 mark for the first time. When I first started these accounts, these were a lot lower values than here, and you can see the dollar amounts of increase. And anybody can sit there and argue with me and tell me that passive investing doesn't work or it's somehow boring. I think the masses out there are more interested in a program that they can resonate with and understand that they're diversified, get a small dividend to boot, and maybe have an aspect of fun to it. This is a fun account. It's a great way of seeking exposure to the market. Speaking from a personal perspective, I love investing this way. It's awesome, and it's killing it. It really is. I mean, a lot of people would say, well, investing is gambling. Well, I'm batting 1,000, and I would venture to guess that you'd have a harder time with that success rate walking into a casino and walking out with 1,000% batting average for win streak. But you can see some of these returns have been pretty sizable. I mean, this is a 33% gain here in this portfolio, in this name here in technology. You can see here the strategic target or the allocation. It's the same thing, guys. We don't need to make this more difficult than we need. So this is the value that I've input on this portfolio. So 14, 13, 12, and you can read down the list here, 9, 9, 8, 8. And that's indicative of how much exposure or how much of a dollar figure do I want to flow into this particular ETF. And so for utilities, I want 8%. For energy, I want 7%. Something to note here, I'm up $76 in energy, and I don't know if there's a lot of people who own individual energy equities right now can boast that they're actually up in energy. And there's a very simple reason for that. M1 Finance takes every dollar that I've flowed into this account, every $25 or every $50 dollar cost average, and it's flowed into the underlying security because it's been underweight this whole time. And now look at that. M1 Finance has achieved that optimal allocation that I've asked it to achieve. So when new dollars flow in here, that's a very unique strategy and capability of M1 Finance to have those new dollars flow into the underweight holding within the portfolio. And so it does all the work for you. And it is reflective there in that name because energy has just been on an absolute absolute downturn the last few years. But this guaranteed that I bought the bottom. To speak bluntly, it allows me to buy the bottom, and it allows me to enjoy the appreciation of the total sector as it starts to recover up. So that's the holdings, guys. We're doing really well, and going into 2021, M1 Finance can really be one of those accounts that's worth looking at. It works really, really well for passive investing, just like I've demonstrated to you guys. In over 16 months or so of owning this portfolio, I have not touched it one time. I have not taken any liquidation whatsoever. We're going to continue to build this account going forward, and we'll continue to track its performance. So thanks a lot, guys, for tuning in. We'll kick you back to YouTube to conclude the video. All right, guys, so we've come out of the Vanguard's passive specialty ETF portfolio. It's performed quite nicely going into 2021. We're going to continue to monitor this account. If you enjoy the information that we've got coming through, you want to make sure and subscribe to the channel, and leave your comments at the bottom of the video, and share the video with anybody out there that you can know appreciate the transparency I put through on the channel, looking to get involved in investing from a wealth building perspective. Guys, thank you so much for tuning into the video, and good luck in your investment future.